Alright, so I have just sold my first ever stock.
Say what?
Yep, that's right. This is the first time that I have ever done anything like this within my portfolio. And in today's video, I'm going to be talking exactly why I did this and also what I'm going to be doing with the money that I actually made from this investment. Let's get into it. All right, so let's not beat around the bush. The stock that I have decided to sell is Walmart stock ticker name WMT. This is a stock where I held 7 shares of the company with a total value of around £800. Now, do I think that this is a bad company? Absolutely not. In fact, I actually look at Walmart as one of the best companies in the world. I actually just returned from a trip to Florida to see my dad, and I pretty much found myself in a Walmart almost every single day because they simply just do serve every single need. So when it comes to the actual company, I actually can't see any faults in this business. Now, the second assumption that people may make is, are you selling out of this stock based on the current market situation we're in right now? Well, if you had that initial assumption, you're also wrong as well. In fact, if we actually take a look at my entire portfolio right now, owning Walmart stock in our current market climate is actually one of the safer plays, I would say, and it's actually one of the very few stocks that I own this year that is currently still in the green. Which then brings me back to the question, why am I actually deciding to sell this stock? Well, I actually have a couple of reasons, with the main one being that owning Walmart stock, and we'll get into this in just a second, doesn't actually fit into the investing strategy that I set out at the start of this year. In fact, around 12 months ago when I decided to invest into Walmart, if I knew a little bit more about the stock market and I had a better insight into what my strategy was going to be going forward, I probably would have never bought this stock despite it being a great company to still own. And the reason why this is because despite Walmart being such a great business, as being one of the biggest businesses in the world, Walmart is what we class as investors as very much a value-based stock. This is just essentially a really well-established business that has done most of its big growing in its early years and right now has established itself in its market. These companies normally have massive moats around them. They can't really be touched, and just every year right now they just grow at a steady rate without really too many surprises. And of course, investing into a stock like this is a really good idea from a risk management perspective. It's very unlikely that just in one day this stock could potentially lose half of its value like we have seen some stocks do recently. And also, stocks like this normally do pay a healthy dividend, and they are also good stocks to normally hold during a recession. However, with all of these great things that does come with Walmart as a value company, it doesn't really get me too excited in terms of my strategy, in terms of its potential upside in the long-term future. And I'm not saying that the stock price is not going to go up. I'm pretty sure it's definitely going to do that over time. What I'm talking about right here is its potential for revenue growth and how it weighs up versus my other stocks that currently do align with my current investing strategy. Now, when it comes to my strategy, it is pretty straightforward. What I'm trying to do is invest around 50% of my money into diversified ETFs. From there, I like to keep around 5% in crypto as more of a speculative play, and the rest of it I like to invest into high growth potential stocks that I believe in fundamentally over the next 5 to 10 years. And I guess pretty much every critic would take a look at my strategy right there and think that is a really stupid idea in terms of this market climate right now, with every small to mid cap growth company being at least 10 to 20% down. But as an investor with what I class as a lot of time on my hands, this is a risk that I'm willing to take and also a process I'm willing to trust. Now, going back to Walmart, when I take a step back and look at the total revenue growth for this company, we can see that from 2019 to 2020, revenue grew just 1.86%. From there, we then saw growth of 6.72%, which of course was probably fueled a lot by the pandemic. And then finally, for the recent 12 months just ended, the company saw a revenue increase of 2.43%. Now, don't get things twisted here. This is still a company that is doing over $550 billion in revenue every single year. These are absolutely outstanding figures for a company. And when you do have a company this established doing this amount of sales, to be able to match the growth percentages of the smaller companies that I am investing into, of course, it would be absolutely impossible for Walmart to do this, which is why, of course, I have decided to sell this company for now. This doesn't mean I will never invest into this business again. Like I've already said, I think it's a great company. Just right now, currently where I am with my life and my investing strategy, this investment just doesn't make any sense for me right now. What I could do is flip things around and put myself in a position that I am now 50 or 60 years old with hopefully a lot more money to spend or invest. Then of course, this is probably going to be a great company to park a lot of my money in. It's a safer investment than the high growth companies. And maybe when I'm that age, I do not have the ability to have a 20 or 30 year plan. I maybe want to be able to take my money sooner or maybe live off dividends, then Walmart's a great stock to invest in right there. But right now, whilst I'm young, I just can't see any sense in it. So having said that, I guess it's only right now to tell you where I have decided to reinvest the money that I made from my Walmart stock sale. And if you've been following me on Twitter, if not, then you definitely should, then you've probably already guessed where this money has actually gone. And that is simply all gone to one company that I've spoken about a lot on this channel and a lot on my social media pages, and that is going to be Walt Disney. Now, if you've actually been investing for some time and maybe you looked at Walt Disney as a stock a couple of years back, you may have even argued that Walt Disney was actually a value play just like Walmart. There wasn't really much happening with this business apart from steady growth across its theme parks, movies, and merchandise sales. However, in recent times with the launch of Disney Plus and a completely new direction for this company, it has actually turned more into a growth stock where investors are very much focusing on growth figures in terms of those Disney Plus numbers. And for me personally, I think this stock really does fit perfectly within my 5 to 10 year long-term investing plan. Now, I'm not going to give you a full deep dive into why I'm actually investing into Disney stock from a fundamental point of view. However, a couple of things to point out. The stock currently sits at roughly $133 per share, and it's currently sitting at more than 30% down over the past year, which for me, I see as a great opportunity right now to buy as much of this stock as I possibly can to get that cost basis down, because when I did enter into this position, I did actually enter it when it was a lot higher. It was around $170 per share. So being able to do this right now whilst the stock price is down low will really give me a great chance in lowering that cost basis. Now, one thing that some people may jump to point out right now is that Disney's current price to earnings ratio currently sits at 79, which if you are looking at this from afar with zero context, does look of course extremely high and may put people off by thinking it's potentially overpriced if they are using this metric only to value a company. And I'll be honest, this was one of the main ways that I used to determine whether a price was good or not when investing, and this all actually changed when I actually started investing into Disney. Now, for those that didn't know, price to earnings ratio is simply the ratio between the company's current share price to their earnings per share. And with Disney, throughout the years of 2020 and 2021, they didn't really earn any money in comparison to their previous years. During this time, pretty much all of Disney's parks were shut down throughout the main part of the pandemic, and even right now they are still only running at a limited capacity. And this is exactly the main reason as to why Disney's PE ratio shot so high. It's nothing to do with the stock price going up, it was actually the lack of earnings due to the pandemic. Now, if we take a look back at 2019, before all of this, where Disney was of course thriving and had no limitations to their business, it was actually sitting at a PE ratio of 24 or 25 roughly, which sits within the general guidelines of an average price company. So taking all of this in and looking at things from a long-term growth investor's point of view, I see a really strong upside for Disney with their parks reopening, of course hitting record sales figures and numbers in terms of their Disney Plus program, and then of course continued growth within their movies and merchandise revenue streams. And that is simply right now why I decided to make the decision to sell my position in Walmart and reallocate that capital into buying more shares of Disney stock. Now, of course, you could just potentially be watching a random guy here on YouTube that knows nothing to do with what he is actually talking about, so please do your own research. All I'm doing is simply sharing my own own opinions and being transparent with my own investments. But I did just want to make this video to explain actually what I think is a really legit reason to sell a stock, especially given this current market climate where there are a lot of people panic selling and stuff like that. Obviously, I haven't panic sold. I haven't tried to time the market. What I have done here is reallocated my capital towards my investments in line with my current investing strategy. Oh, and if you did want to check out the full details of my 2022 investing strategy, then make sure you go and check out this video right here. I go into everything that I plan to do this year in terms of my investments, and I think I even mentioned Disney stock in there as well. So I'll see you in there.